Hi everybody, Alex Deploy here from Expert Forex. And one of the biggest questions we get asked in Expert Forex by our clients is, where can I find settings for my EA? And we do supply free settings for most of our EAs and also paid settings in our premium forum. So there are already some optimized settings that can be used. They need a few adjustments, but I will cover that in a future video. But there are also other settings that are even more interesting that you can find. And I'm going to show you how to find those settings in this video. And the way of finding those settings is by spying on winners and traders that are doing exceptionally well. So in order to spy on the winners, you need four things. Firstly, you need access to the winning trades, and I'll show you how to get that pretty easy. Then you need to own the robot that you intend using the settings on. So I think that is almost a given. And then the other tricky areas, you need to know which are the important settings that you need to focus on when using that particular robot, because that is information that you're going to extract from the winner's trading records. And then you need to know how to find that information. And that is what I'm going to be showing you in this video. It's going to be a working video. I'm going to actually work through each of the examples step by step. And hopefully after that, you'll be able to do the same. Okay, so let's cover step one. Where do you find winning trading records? So there are two sources that you can use. We have recently had a trading competition, and in fact we have a regular annual trading competition, and you can just go back over time to apply the same principles as what I'm going to be showing you here. But I'm going to take the winner's results and I'm going to find the settings that the winner used. And on your screen here, you can see the FX Blue version of the competition that we had. Here is the competition that was held, and there are the competitors that took part, and here's the winner at 852%. And I'm going to show you how to analyze the winner's strategy. Then, as you know, we have a linking service where you can link your account to successful traders. And on this service, and this is the marketing page of the service, I'm just going to go down on it. And what we do is that every week we update the links that you can link to, so that you can have a look at which links are doing particularly well and which ones are battling a bit. But you can also see which ones you can link to. So every account that you can link to has a blue link that you can click on, and let's say we click on this link, and again it will take you to an FX Blue page which you can use to analyze the results. So there's no shortage of winning traders that you can spy on. And in this list, you can see there are so many that you can go and analyze. And in the competition list, again, you have so many that you can go and analyze. They've all done pretty well. So there's lots of strategies that you can go and find. Okay, so that's step one, and that was easy. I've shown you how to find them. The links to the competition as well as the linked account page will be in the description of the video as well as in the commentary of the video. So the next point is own the robot. Again, that's pretty simple. All of these trades are based on the profit retriever robot. So if you're not an owner of the robot, not too serious, the principles that you see in this video are the ones that you can use on most other EAs. And then the next important one, and this is where a lot of people battle, is to know the important settings that matter. So let's have a look at that. So on your screen, you can see the settings for the profit retriever. And I've highlighted the most important settings, which is the moving average period, the gap size, the gap scaling rate, the lot sizing, initial lot sizing, the change rate of the initial lot sizing, then the target for the initial or the first phase, and then there's a second phase. So in other words, you can go up, increase your lots up, and then go down, or you can go down or go up, or either of those two on their own. So if you do use a second phase, again the same applies. what is the change rate, and what target are you going to use. So we're going to try and fish this information out from the results. And then there's the next one: what closure amount are you going to use to close your open trades? And I've listed them there. So it is a case of going through the EA, finding the most critical settings. The most critical settings are basically the strategy. Which strategy, what gap sizes are you using, how are you increasing your lot sizing and things. So that's all the strategy. So those are the important settings that you need to focus on. Here they are. So what I've done is I've created a spreadsheet, an Excel spreadsheet that we're going to fill in the course of this video. And at the winners of the competition, the winner traded the FTSE 100, and there are the items that we're going to be filling in the course of this exercise. So we've identified the key settings that we want to look at, and let's go and find those settings. So I'm going to start with the winner of the competition. Okay, so here we are back at the competition on the FX Blue website. So we go to competitors. I'll click on the winner. There is the winner, and we'll click on that, and it will take you to this page, but we're interested in the statement of the winner, and it will give an analysis of that. All right, so there's the graph of the winner. It doesn't look too good at the end here, but what I think we should focus on is the steady growth that's happened over here. As you can see, the FTSE 100 was the main instrument traded, so we'll focus on that too. And you can see the nice return, 800% return. Drawdown quite small, but FX Blue's drawdowns aren't calculated too accurately, so don't pay too much attention to that. Okay, so now let's look at the balance chart, and you can see there are periods of growth, but there are also periods of just sideways movements like that and sideways movements like that. Now I'm going to focus on the sideways movement periods because those are actually the drawdown periods, and they will tell us what strategy has been used. So I'm going to go, here's a nice long drawdown period on from the 8th of the 9th to the 13th of the 9th. That seems to be a nice drawdown period. I'm going to go and have a look at which orders were placed over that period, and we can start filling in our Excel spreadsheet from there. So how do I do that? I click on orders, and I then click on closed orders. And what I'm going to do is I'll sort them by open date. So we can go like that. So I've got them by open date, and we're looking for, I think it was the 8th of September. So I'm just going to scroll through here until we find the 8th of September. And I think it's on page 8. Let's just see if that's correct. So let's start at the top. Here you can see a successful deal. It went for 12 pips, and that was the profit element, and that was the starting lots. So that gives us an idea of what the gap size is. Now, if the net, in other words, 12 pips is what the transaction gain was, so the net must be possibly 15 pips, because you've got to add the spread into. So what we're going to say here is that we think that the gap, and these things aren't 100% accurate, we think that the gap size is around about 15 pips. So the next thing I'm going to look for is a very short but positive run. So in other words, that maybe 2 transactions resulted in a profit, and in fact there at the top there are 2 transactions. There's the first transaction, negative 208, and then there's the second transaction, 261. And those combined resulted in a profit, so the profit retriever would close those transactions at that point and start new ones. So this is telling me that the profit that the trader was looking for was the difference between these two, 61 and 8. So that's about 53 or something like that. So the profit the trader was looking for was about, and we'll move this over here, the profit or the close was around about, and I'm just going to make it 55 to round it off, $55. So we started to extract some information. We now got the gap size. We know more or less what kind of profit the trader was looking for. Now my next thing is going to be to look for a negative run, a long negative run. And now that we've got a long negative run, we can actually start calculating the actual strategy that was used. So here we go. We've got a strategy here of 2.5, 2.8, 2.4 to start with. Then it went down to 2.44. So I'm just going to calculate what is 144 of 2.0, and it's 60%. So what the trader is doing is reducing the lot sizing by 60%. So we go 60%, 60%, 60%, and he's reducing it all the way down, and eventually it gets to a point where you can't reduce it anymore because we've hit the minimum for that broker, and on it goes, and it then sticks at 01. So what we know now is that this trader's only used a phase 1 approach because it hasn't started increasing. If it starts increasing, we might see that in the next analysis, then it'll be more meaningful. So the gap size is constant. Let's just say constant. The lot size, initial lot size was 4. So that's 4. And it decreased by 60%. And if I can do this, 60%. And the end target was, in terms of lots, 0.01, which is the minimum lot size that you can have. And then there was nothing for the second phase. So can you see we've actually analyzed the whole strategy? If you add all of that up, it comes to $50. So what we've done, can you see we've actually analyzed the strategy of the winner of the competition. The strategy was to use a gap size of that, not to increase the gap as it went on, to use initial size, a lot size of 4, decrease it by 60%, so very quickly, go right down to 0.01, and then wait for a retracement that will generate a $55 profit. Now, it must be noted that for a successful transaction, this trader was making $550, and for a retrieval transaction where there are many transactions happening to retrieve that negative first transaction, that he was only making $50. So that's another concept that's quite interesting. A huge upfront profit, very small retrieval profit. So okay, we've really knocked this on the head. The only one that is a problem is the moving average, and I'm not going to even go into that. That can be done by reference to the charts, but the moving average is I'm actually going to call it not applicable, because if you know the profit retriever, you'll know that the profit retriever makes profit no matter which direction the price goes. The chances are that this was a very sensitive moving average, like between 4 and 12, because it wants to catch the most recent trend in the FTSE 100. Okay, so we filled this one in, and we're going to move on to the next one, link. And I'm going to use link 13 in this case. I think it shows the principles quite well, so I'm going to go there. So we finished with the competition, and we'll move on to the linked service. Okay, and here we are at the link service, and let's scroll down and have a look. And I'm going to look for link 13. It's over here, and one of the reasons why I've chosen it is because it trades a Forex instrument. A lot of the best results come from indexes and gold and silver and all kinds of other ones, but I want to focus on a Forex instrument. And here we go. I'm going to click on link 13. And again, it takes us to the FX Blue statement. And here you can see again a nice growth, constant growth, and then it's hit a bit of a plateau there. And those are areas of drawdown. I just want to see if there's an equity element in here. Oh yeah, there's the equity. So the equity is the open trades plus the balance. So you can see the equity chart is actually the most accurate one. And what we're saying is that over that period there was quite a big drawdown. Not that, yeah, about 6,000. So there was a drawdown there. That's where we need to go and have a look at the strategy analysis. So it is, and on your screen you can see it's around about the 8th of December. 8th of December. So let's go and have a look at the 8th of December. All right, so the first item here is that the Aussie New Zealand was traded. Now, the Aussie New Zealand is actually a good currency because it tends to trade sideways. But I think over this period, there were some other things that happened that made it not trade sideways. So let's go to the beginning of September and find out the same information that we did earlier. So we click on orders, we click on open, and we then go into closed orders. We again sorted by time, and you can see this one's been going since April, so it's been going a long time, this account, and we're looking for September. Now I've got no idea where September was, and let's just go and have a look. There are 5 pages, so it might not take that long to find September. I'm just going to go to, I'll just flip through. All right, so here we are at September. And again, the first thing to do is to look at successful trades. Okay, and here is what looks like a successful trade. The gap size, or the pips made, was 17.5. I would say that if we go back to here, the gap size was most probably around about 22, because the Aussie New Zealand tends to have a high spread. So 22 is more or less what the gap size would be. And let's have a look at the lot sizing. So the lot size, initial lot size, appears to be 1.2. So 1.2, and then it went down to 96. So let's go and have a look. 96 divided by 1.2 is 80. So where the winner of the competition used 60%, this one used 80%. So it decreased its lot sizing by 80%. So we've got a point there. And then the initial lot size was 1.2, so quite a lot different. It doesn't look like there are any gap size increases. So there we are. So we've got some critical information. We know the gap size, we know the starting lot size, and we know the decreasing amount. So let's go and have a look if there's more information that we can get. So now the step again is to find a long run of trades, and here's a long run of trades. So let's have a look, and here we go. So we say starting there, it decreased by 80%, and then 80%. See how it's going down, all the way down to 0.4. Now, can you see that it starts increasing? So now it's increased by 20%. Looks like 20%, and I can tell later on. But let's have a look. So it went from 0.1 to 0.15. Now that's about 30%. That looks like 30%. So it could be 30%, this increase. Let's have a look. 0.4. You see, there's a lot of rounding that happens with lot sizing. So I'm going to assume about 30%. I just want to 10. Yeah, it's about 30%. So we're going to go. So this trader used a 30% increase. So that the initial target was 0.4. Let's see if I can. 0.4. So it went from that, decreased by 80% to 0.4, and then started increasing by 30%, I said, yeah, 30%. And the second target we don't know because this run never got there. What happened is it reached its financial target, closed the deal. So we don't know what happened there. But the financial target, and let's go and have a look over here for a potential target is, and we'd start there, 120. There's a short run. So it was only going for $5, 67, 62, $5. So the target, which we didn't enter yet, is 5, and we don't know what their final target is. Maybe we'll find another run that's quite long. Now the other thing that I must point out is we've analyzed a certain section of the trading. What happens is that these traders, especially the linked traders, they review the situation and they say, look, 1.2 was too high. I'm going to reduce it to a starting of 1.8. So I'm going to actually put that in. So can you see that after this bad run that happened, the trader decided to start at 1.8 and reduce it by 80%. So the trader made a change here and started at 0.8. Whoops, just 0.8. Come on, take it there. We are. Okay, so the trader and continued this method. We'll see if it did continue. So sometimes it's not that easy to analyze these because sometimes the traders do change. So there I've seen this change. So that's right. Let's go and see if we can find a long run with the 0.8 setting. And no, it didn't. So here's an example of a link trader that said, okay, I got into trouble by using an initial setting of 0.12. And it resulted in how many open trades? A whole lot of open trades. You can see huge amount of open trades, most probably about almost 20 open trades. And the trader said, no, that's too risky for me. I'm going to start with 0.8. Made a change to 0.8. And I think the strategy most probably stays the same for the rest, because once you've changed to 0.8, once you've changed, the strategy more or less stays the same. But the other thing that we don't know is what the target is. Now, sometimes you have to make an assumption. The target is very seldom more than the starting point. So over here, I'm going to make an assumption that the target was 0.2. So what would happen? It would go down for a long period and then go up for a long period and get to a stage of 1.2. So again, the moving average is most probably not that important. I'm just going to say I could go into a bit of work to do that. But what drives what drives the profitability are these strategies over here, combined with which currency you're using. That is very important, that you match your currency with the settings. So those settings might work for the Aussie New Zealand, but they won't work for the Aussie itself, for instance, the Aussie US or another currency. So they're very particular to the particular instrument that you're trading. Now, the object here of today's video was just to give an idea of how you can roughly, and it's not exact, but roughly work out what the winning traders are doing. And here, I'm pretty happy that this is what the winning trader did up to that point, then suddenly changed around and said, no, I'm going to go more conservative. And note the conservative, how you go conservative, you reduce your initial lot size. So that gives you an idea. Also, let's go and have a check if the gap size was increased. So let's go and have a look at that. So the gap size. Oh yes, the gap size. So as you can see, there was the change, 0.8, and the gap size went to 21 from what we previously identified as 17. So 21 plus, so the gap size went to 25, because I'm again adding the spread. Could even have gone to 26. I'm going to put that. So can you see how the trader was thinking? The trader said, oh, I got a bit of a fright there because there was this long drawdown period. I'm going to now increase my gap size. So there's going to be fewer open trades when I go into a negative drawdown. And I'm going to start at a smaller level. I'm going to not start at 1.2. I'm going to start at 0.8. So the drawdown, the dollar drawdown effect will be reduced tremendously. So you can see how these traders manage their accounts on an ongoing basis. And I know, for instance, in my case, I review my accounts on a weekly basis for this particular aspect. If there's been big drawdowns, then I make the settings more conservative. And these are the two settings that you need to watch. The gap size, you increase the gap size, and the initial lot size, you just decrease the starting point. And that's enough to really make the strategy less risky. Now, I hope you've enjoyed this video. Some of the concepts are a bit advanced. If you're not comfortable with the settings, or you don't know how they work, it's very difficult to do this kind of re-engineering of the strategies. But the strategies that I found today I'm pretty happy, are within 80 to 90% correct on what the actual trader used. And that's close enough, because those strategies look pretty robust to me. But what you can do now is go and try the same approach with any of the linked account signal providers, as well as with the competition participants. And bear in mind that these traders do review their strategies on an ongoing basis, and what would happen is they invariably would reduce risk. They would never increase risk, they would reduce risk. And the way of reducing risk is increasing your gap size and decreasing the initial lot size. The other thing that I must point out is that the profit retriever is such a simple EA, in that there are very few settings that matter. So as you can see here, the settings there are only a couple of settings that you need to focus on. There some EAs you have hundreds of settings. The profit retriever only has the gap size is the main one, the initial starting point, and then the amount that you want to decrease or increase the lot sizing by. So it's very few settings that you've got to play with. That and as you can see, even these experienced traders that provide the linked accounts still are refining their accounts on an ongoing basis. So from me, Alex Deploy, cheerio.